Good morning and welcome to Markets Cafe here on ET Now with me, Lisa Fernandez, and I have with me my colleague Snehi Shah. Good morning, Snehi.
Good morning, Lisa.
Well, and this is the show where we take you through all the important updates coming in that will be in focus, both on the international as well as the domestic front. So let's look at what's happening on the international front, Snehi. Today is the last day of the month,
Absolutely.
and it seems that all the indices are poised to log in with strong gains. So what else is looking in the international front?
Absolutely, Lisa. Very good morning to you and a happy Monday and a very good morning to all our viewers as well. Let's quickly start with what the US markets did then in overnight trade. And the stock futures rose slightly in overnight trading on Sunday as the market is poised to wrap up the month of July with strong gains. Now, the futures of the Dow Jones Industrial Average inched up 34 points, S&P 500 futures rose 0.2% and Nasdaq 100 futures were 0.4% higher. Now, remember on a monthly basis, the S&P is up 3% for the month of July. Dow did see a strong rally of gains as well, up 3.1%, and it was Nasdaq Composite has also gained 3.8%, topsy-turvy one for Nasdaq there, but managing to end up with gains. So Nasdaq is also on set to end the month with a winning streak. Followed by that, the blue chip Dow is also up 3.1% like I mentioned. And investors will shift their focus on the big jobs report this week. Economists polled by Dow Jones expect that the US economy will add 200,000 jobs for this month. And non-farm payrolls have increased to 209,000 for the month of June. Also, let's focus on what the earnings look like in the US. And so far for the earnings season of the 254 companies that have reported their earnings so far, 78.7% of those companies have reported earnings above analyst expectations. So this is data that's coming in from Refinitiv. And on the earnings front, you've also got the heavy lifters of the US market. That's Apple and Amazon. They will be reporting numbers later this week. So keep an eye out on all these important cues that's coming in for the US markets. Let's shift focus to Europe then. And European stocks closed slightly lower on Friday as investors processed a week of earnings and central bank decisions. Remember, the ECB also took its decision, and the stock 600 index closed 0.2% lower, so 0.2 of a point downtick coming in there for the stock 600. Most sectors, although closed in the negative territory. And media stock led the losses. They were down around 1.3%. So while we have a slightly weakish handover coming in from Europe, US markets looking strong. Futures had a slight of an uptick, and on a monthly basis also all three indices logging strong gains anywhere between 3 and 4%, Lisa. But this is what the global handover looks like on the equity front. Why don't you take us through what the commodities did then?
Well, let's look at the oil prices, how they are trending. The WTI crude, that's down around 0.3% and it's at around 80 per barrel dollar. The Brent crude, that is also flattish at around 84.5. But if we look at the weekly gains, it has logged its fifth straight week of gain, the oil prices, and that's on the back of healthy demand. Well, the healthy demand, it comes from the Fed, which Fed and ECB, they have indicated that they will be stopping or they will be pausing on the rate hikes. And also China has pledged up and they have stepped up on its stimulus. The quarter GDP also has come in very strong. Along with this, even the supply cuts from OPEC, that has contributed to the oil prices being at fifth straight week high. So that's on the crude oil check.
Alright, with that, let's also look at all the important cues that you should be keeping on your radar for this trading week. And let's start with US then. And on the 1st of August, which is tomorrow, you will get the S&P Global Manufacturing number. You will also get the manufacturing PMI number, that is. August 3, you have the S&P Global Composite and Service PMIs number. And August 3 as well, you also have the initial jobless claims number like I mentioned. And let's shift focus to UK then. And on the 1st of August, you have S&P Global as well as the UK manufacturing PMI numbers coming out. And August 3, all eyes will be on the Bank of England rate decision. Shifting focus to Eurozone, July 31st, which is today, you have big numbers coming in from Eurozone, which is CPI as well as GDP data. Coming tomorrow, you have the S&P Global Eurozone manufacturing PMI numbers. August 3, you have services PMI, PPI numbers also coming in. And August 4, you've got the retail sales number coming in. Shifting focus to the east then, and let's look at China. 1st of August, you've got the kicks in PMI manufacturing numbers. 3rd August, you've got kicks in services and composite PMI numbers coming in. And August 4, you've got the second quarter balance of payment current account data coming in for China. Important cues to watch there. Let's shift focus domestic and on the corporate action front. On the 2nd of August, you've got Sheela Foam. The board will consider raising funds via QIPs. And on the IPO action front in the primary markets from August 3rd to 7th, you've got SBFC Finance IPO, which will be opening for subscription. So important cues coming for this week. Lots of activity happening globally as well as domestically. So keep an eye out for all these cues.
And now let's move on to what else is on the global front. Well, China is set to announce new measures to boost consumption, that is to revive the economy after its post-COVID recovery. The officials will be holding a press conference today. And remember, this comes after the country's growth momentum weakened in the Q2 on the back of property market slump following a brief rebound at the start of the year. Well, the exports also witnessed a decline, pushing the economy to the brink of deflation and further darkening the growth outlook.
And in some somber news coming in from neighboring Pakistan after a suicide bomber claimed as many as 44 lives and wounded nearly 200 people. The chief of Jamiat Ulema-e-Islam Fazal has demanded Prime Minister Shehbaz Sharif and the province's caretaker chief minister to investigate the incident.
And in some stock-specific action, U.S. retail giant Walmart has paid a whopping $1.4 billion to buy out the Tiger Global-backed e-commerce major Flipkart. And according to the Wall Street Journal report, the hedge fund came out with a letter indicating the buyout.
And shifting focus to the world of cinema then, Warner Bros Barbie shows no signs of slowing down in its second week at the box office. Director Greta Gerwig's take on Barbie, the year's #1 movie by many parameters, has made more than $351 million in the US and Canada since opening and nearly $775 million globally. Meanwhile, Christopher Nolan's Oppenheimer stayed in #2 position.
And on to some biggest market voices on ET now through the week. Ramdev Agarwal, S. Naren, as well as Ajay Srivastava. They share their sectoral views. So listen in.
Banking, I would say. Still, banking is going full blast, but the P multiple is not very high if you look at it. So you have a good chance of making, wherever you have an insight about 20-25% kind of growth, there you can make decent money. In fact, market beating returns you can get there. Say like Bajaj Finance kind of a company, which are traditional lenders, but using the power of technology. Say even the broking, where it has become all digital. Actually, the purest possible digital businesses in India are the broking companies. Yes. You know, whether it is Zerodha, whether it is Angel One, in terms of execution, we have still got lot more. We are a lot more phygital, I would say.
We did some analysis over the last 10 years and we found that banks are the only sector which did not get where valuations haven't gone up. Whereas if you look at most of the other sectors in India, what we found was over a 10-year period, valuations have gone up by 30 to 40%. That the price to earnings multiples of most of the other sectors in India have gone up by 30 to 40%.
I think the most overrated sector too is retailing, certainly by any chance. Retailing, fashion wear retailing, most overrated sector. General retailing, most overrated sector. You saw the Reliance results. You've seen Trent. You've seen, Avenue you just spoke about. Just see their performances versus what the market valuations are. What's the most underrated sectors? Paper, PE of less than 5, highly profitable, duopoly, literally, no competition, necessary of life, but still the PE is 5. Such as market, fashion retailing gets PE of 120, essential profitable business of paper gets a PE of 5. That's market, my friend.
And on the sidelines of the Semicon event, Sumita Karir, my colleague, caught up with Applied Materials President Prabhu Raja, who says they will bring supplier ecosystem to their R&D center in Bengaluru. Remember, just last month, the company had announced an investment of $400 million in India over 4 years. Listen in to what he had to say at the event.
we will bring the supplier ecosystem along with us, who makes materials, chemistries, and technologies. They are going to come with us to these centers. And once they come into the center, they can start their factories within India. It's up to them to do it. That's building their ecosystem around it. Other one is working with the universities and developing that talent, attract, inspire, and coach the students for the next generation engineers.
A lot of brands repose their confidence in India's chip-making ecosystem. But how soon do you think that could be developed? Because, one of the big things about semiconductors is that not only it is capital-intensive, well, capital is coming in, but it's time-intensive as well. It takes a lot of time to develop an entire, not just fab, but an ecosystem. So what kind of timelines are you looking at?
I think the center, what we announced, building plus bringing the equipments and bringing suppliers, their equipment, is going to take 4 years. But we are not going to wait for 4 years. We already have R&D centers and commercialization centers in India. We are going to start our journey right from now.
So your work has begun. Your work at the R&D center has begun already.
Our work in R&D center has begun already. We have been doing it. We are going to scale it right now.
But going forward, how do you see India's semiconductor ecosystem? You're based in California, and you're talking to us after the big announcement was made in the United States by Prime Minister Modi with reference to applied materials.
I think when you think about India, I think when you overall, that talent is a big pool of talent. This industry needs another 1 million engineers and technology leaders, technicians by 2030. India has lots and lots of talent, so that's where India is a very attractive place for us.
And now a bit on the tax planning front. 31st July is just round the corner, and while most of us have filed our income tax returns, the task is not done yet. Because if you had sold shares, mutual funds, jewelry, real estate, and so on in the financial year 2023, you might have ended up with capital gains or losses. So make sure you disclose it properly while filing your ITR. Well, for that, my colleague Bhavya, she's joining us to get us through all of this.
If you'd sold shares, mutual funds, jewelry, real estate, and so on in the financial year 2022-23, you might have ended up with capital gains or losses. Now make sure you disclose it while properly filing your income tax returns this month. Remember, capital gains and losses are taxed differently, and there are specific ITR forms that you need to select for filing of returns. Let's delve deeper into capital assets, treatment of gains and losses from transactions in capital assets, and the applicable ITR forms. First of all, let's understand what are capital assets. Well, any property owned by an assessee, which is land, house, shops, apartments, as well as investments in financial instruments such as shares, mutual funds, and gold bonds, can classify as capital assets. In addition, items like jewelry, valuable gemstones, ornaments made of precious metals like silver, gold, or platinum, archaeological collections, drawings, paintings, sculpture, or any other form of artwork, even if used for personal purposes, are also classified as capital assets. Well, these different assets are classified as long-term or short-term, and depending on that, they have varied tax rates. So what do you do about the capital losses that are incurred? Well, you can set off and carry forward those. You cannot set off the losses against the income under any other head, but you can do so against any other capital asset in certain situations. For example, for short-term capital losses, they can be set off against both short-term as well as long-term capital gains. But long-term capital gains can be set off only against long-term capital gains. No capital losses can be set off against gains from virtual digital assets, which is VDAs, nor any capital loss from such VDAs can be offset against any other capital gains. Now, capital losses which cannot be set off during the relevant financial year would be allowed to be carried forward for 8 years immediately following the year in which such losses incurred. This allows you to utilize the losses effectively and reduce your overall tax liability over the time. Then which ITR form should you file if you have capital gains and losses to report? Well, taxpayers having gains or losses from capital assets are generally required to file ITR 2, provided they do not have gains or losses which are to be taxed under the head business from income. In such a case, taxpayers must file ITR 3, and for those opting presumptive tax can only file ITR number 4. Now, selecting the correct ITR form is a must. Filing a return in the wrong ITR form makes it invalid or will be considered as not being filed at all. So what are you waiting for? 31st July is near. Go and file your income tax returns.
Alright, thanks Bhavya for all those details. This is an important cue for all taxpayers coming in. But with that, let's quickly slip into a very short break. We'll come back on the other side with what the Asian markets are doing, and we've got some latest numbers coming in from China as well. Hi there, welcome back, and thanks for staying tuned to Market Cafe with me, Snehi Shah and Lisa Fernandez. Before we went to the break, we promised you that we've got some new data, fresh data coming in from China. So let's look at what the Asian markets are doing. But let's keep our focus on China then, because China they have just released their PMI numbers for the month of July, and China's factory activity contracted for a fourth consecutive month in July, while non-manufacturing activity slowed to its weakest this year as the world's second largest economy struggles to revive growth momentum in the wake of soft global demand. Now, the official manufacturing purchaser managers index, which is the PMI number, came in at 49.3% in June. This was the poll that was coming in June. It came at 51.5 this time, and this is according to the data from the National Bureau of Statistics. July's reading was slightly better than that, coming in at 49.2. This is the median forecast from Reuters. Monday's figures also showed China posting its weakest official non-manufacturing PMI. Pardon me, this figure is coming in at 51.5 compared to the 53.2 in June. This was a fourth straight monthly decline coming in, and on the back of this, you can see Hang Seng. Hang Seng is up with solid gains coming in at 2% this morning. Followed by that, let's also look at what Shanghai is doing. Can we have Shanghai on the screen, please? Yes, Shanghai is up also with solid gains of 1%. Now let's look at what the other Asian indices are doing, and let's shift focus to Kospi then. And Kospi is almost up 1%, so strong gains are also coming in for other Asian indices. You've also got Nikkei. Nikkei is up 1.9%, very close to those 2% gains. Strong gains coming in for Nikkei also this morning. And lastly, you've also got the ASX 200 up nominally 0.1% up. So Australia lagging behind, all the other Asian indices clocking in strong gains this morning. And for GIFT Nifty also up almost 0.7%, 129 points up, indicating a rather solid start for our markets this morning. But Lisa, let's see how that pans out for our markets then.
Well, as we pointed earlier, the Brent is also gaining for the fifth straight week, and it is set to post their biggest monthly gains in over a year. Now, what is aiding the rally and what impact does it have on the OMCs? Somit is here joining us with some more details. Somit?
Well, if you see, Brent Crude is trading around the $85 per barrel mark. Now, this is the fifth for the last 5 consecutive weeks. Brent has been continuously gaining, and for the month of July, if you see, the gains so far has been close to 13.5%, which is the highest monthly gains that Brent has seen since Jan 2022. And from the recent low of around $72 per barrel, the prices are up nearly 18%. Now, what are the reasons behind this rally? Firstly, is the tightening supply globally, rising US gasoline demand, the Chinese stimulus measures, and given the fact that the market is also considering that central banks globally are at their last leg of a rate hike. Now, whom does it impact the most in India? Well, it will impact negatively the oil marketing companies. Now, this because of this rising crude prices, the marketing margins that oil marketing companies earn on selling every liter of petrol and diesel, that has come down drastically. Now, at the start of June, where crude prices were around $72 per barrel on petrol, the gross marketing margin earned by oil marketing companies stood at close to 13.7 rupees per litre, which has now come down to 5.6 rupees per litre. And on diesel, they were earning a positive margin of around 9.1 rupees per litre. However, the margin has now turned negative, and in fact, on selling every litre of diesel, the oil marketing companies are losing money, and that is to the tune of around 2 rupees per litre. Other than that, the oil explorers like ONGC, Oil India, Vedanta and HOC, for them largely the rising crude prices should be positive, but given the fact that the government has been changing the windfall taxes, there might be an increase in the windfall taxes, and largely the impact on these companies is expected to be neutral. However, on the negative side, then there are paint companies, aviation companies, tire companies. For these three sectors, nearly 40% of the total RM cost is either crude or crude derivative prices related. For lubricant manufacturers, nearly 50% of the total RM cost is crude related. For cement companies, it's nearly 40 to 50% of the total RM cost, and there are a host of specialty chemical companies where the raw material prices are linked with crude prices, and a rise in crude prices would also lead to a rise in their raw material cost and hence could impact negatively to them as well.
So, Amit, thanks for all those details. But stay with us then, because an interesting trade opportunity arising for investors is arising because Airtel might be calling off the balance of rights issue money soon. So, Amit, explain us what this means and take us through this.
Well, the interesting trade opportunity here for investors could be between the Airtel partly paid shares and the Airtel normal shares. Now, the partly paid shares are still trading because Bharti Airtel has still not called the entire rights issue amount. Now, they have just called the application money. Now, if you see the Bharti Airtel partly paid shares, they are trading at around 493.85 rupees, and the balance call on pending is close to 401.25 rupees, which means that the total amount of this partly paid shares comes at around 895.1 rupees. As compared to that, Bharti Airtel share prices are trading at just 895. Now, usually Bharti Airtel partly paid shares used to trade at a premium of nearly 20 to 25 rupees when compared to Bharti Airtel shares, and these premium is largely on the back of the time value of money, because you need to invest less in Bharti Airtel partly paid shares as compared to the Bharti Airtel total shares. Now, Airtel has time till October 2024, that is still 15 to 16 months to go to call the entire balance amount on the rights issue amount, and still there are no clear timelines on when Bharti Airtel might be calling this amount. And as per analysts, Bharti Airtel at this moment does not need cash and does not have any major capital expenditure plans that cannot be sufficed from the cash flow that the company has been getting. So they are not expecting Bharti Airtel to actually call the balance of the rights amount at any time anytime soon. So this could be a good trade-off for investors as per analysts, because they could own the Bharti Airtel partly paid shares instead of Bharti Airtel original shares, because the amount deployed will be less, and going forward they are also expecting the share prices of Bharti Airtel partly paid to rise going forward.
Thank you, Somit, for sharing your perspective on the opportunity arising from this right issue. So keep a watch on Airtel. But now moving on to the news for the hearing impaired segment.